What happens to your IRA when you retire? Have you ever wondered what really happens to your individual retirement account when you reach retirement age? This is an important topic, especially if you have invested in real estate through your IRA. Let's break it down step by step. When you retire, your IRA becomes a source of income and assets. It is important to remember that your IRA owns the real estate assets, not you personally. The property is held within the IRA structure, which is a separate legal entity. So, when you retire, you control the IRA and its assets, including any real estate investments. Once you reach the age of 73, you must begin taking required minimum distributions from your traditional IRA. These distributions are mandatory withdrawals based on your life expectancy and account balance. If your IRA holds real estate, you may need to sell part of the property or other assets to generate cash for these distributions, as they must be taken in cash. Now, let's talk about the tax treatment of withdrawals. Withdrawals from a traditional IRA are generally taxed as ordinary income. If your IRA holds real estate, any rental income and capital gains generated within the IRA grow tax deferred until you withdraw. When you take distributions, the amounts are taxed at your ordinary income tax rate. If you have a Roth IRA, qualified distributions are tax-free, including any gains from real estate investments, as long as you meet the age and holding period requirements. During retirement, any rental income generated by real estate held in the IRA continues to flow into the IRA tax-deferred or tax-free, depending on the type of IRA. However, expenses related to the property, such as maintenance, taxes, and management fees, must be paid from the IRA funds. You cannot pay these expenses out of pocket without causing prohibited transactions. It is also essential to know that you cannot use the property for personal use or allow disqualified persons, like family members or service providers, to use it. Real estate held in an IRA cannot be used as a personal residence or vacation home. Managing real estate within an IRA requires careful record-keeping and adherence to IRS rules to avoid penalties. For real estate investors, using a self-directed IRA allows you to diversify your retirement portfolio beyond stocks and bonds. At retirement, you can choose to sell the property within the IRA and take distributions in cash, continue holding the property and take distributions from other IRA assets, or use distributions to invest in other assets or reinvest in real estate outside the IRA. Keep in mind that owning real estate in an IRA involves additional fees, such as custodian fees, property management, and maintenance costs, all paid by the IRA. These can reduce the IRA's cash available for distributions. Unexpected costs can impact the account balance and your retirement income. In summary, when you retire, your IRA that holds real estate becomes a source of retirement income through distributions, subject to IRS rules and tax treatment. Real estate within an IRA offers diversification but requires careful management to balance income, expenses, and compliance with retirement account regulations.